Today we got setups on the Australian dollar Japanese yen currency pair and the funky DogeCoin cryptocurrency. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Today we're going to look at an ascending triangle on the Forex currency pair, Australian dollar Japanese yen, and a bull flag on the weird cryptocurrency DogeCoin. But first, we've got a couple of active trades to check out. And later on, this week's trading maxim. Happy Monday, everyone. I think we're going to float away here in North Texas with all this rain we're having. When I moved here about 6 years ago, I thought it would be a lot drier than South Carolina, but it sure hasn't been this year. Let's catch up on the active trades. Well, the graph cryptocurrency triggered a sell right here on May 17th. Hit the first target right here on this huge candle on May 19th. Got half off for profit, moved the stop to break even on the remainder. Stop is currently right here at 120.78-ish. The PSAR is about to catch up. As soon as it gets below that level, we'll start trailing the stops on this. And lastly, Kiwi yen triggered a sell signal right here on May 14th. And closed down here on May 17th. I missed this close somehow and ended up closing right here, which was a little bit better at 78.93-ish for a 36 pip loss. But this was only a half-size trade. As you can see, it did not make the volume average on the trigger day. If this volume and volatility continue to decline like this, I will go ahead and redraw this triangle up here and probably like so-ish. That's kind of messy, but you get the idea. And we'll take another shot at this thing. Okay, that's all the active trades for today. Let's take a look at the trade picks for today. Our first setup today is an ascending triangle on the Australian dollar Japanese yen, affectionately known as the Aussie yen. An ascending triangle consists of a strong resistance level, like this one at 85.50, with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern, and I will only take a buy signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility, like you see here. I measure the volatility using the ATR, or average true range. And here's our trade plan. We will buy a daily candle close above the triangle, or above 85.50. On the breaking candle, to take a full-size position, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average. You should get at least 0.75. If you don't get that, I suggest that you stand aside on this trade. Stop loss is 1.5 times the ATR. And the first target is 1 ATR. So on the day this thing breaks, right ahead of the close, say 15 minutes, 30 minutes, sometimes 45 minutes before the close, prepare your buy order. Look down here at the ATR, multiply that by 1.5, measure that distance behind the entry for your stop loss, measure 1 ATR above the entry for your first target. If after entering the trade, candle closes back inside the triangle, I'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on the Aussie yen currency pair. And our next trade pick is a bull flag on DogeCoin, or DogeCUSD Bull flag consists of an incoming uptrend like this one right here and a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a bull trigger on this. And the pattern is confirmed by a decline in volume and volatility, as I mentioned earlier. I measure the volatility again using the ATR. And here's the trade plan. I'm going to buy a daily candle close above the bull flag. Now, I'm not going to bore you with that whole spiel again. The management details are the same for all of my trades. If there's at least average volume, enter a full-size position. If there's only 75% average volume, enter a half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR, and the first target is 1 ATR. If you get a candle close back in the flag after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. Again, I'll take a maximum 2% risk on this trade. And that's today's setup on DogeCoin. Okay guys, that's how I manage these trades. You do you, okay? Make sure you don't take any trades until you understand what you're doing and until you are comfortable with the setup. And the other side of trading is the psychological side, and to keep a handle on that, I use my trading maxims. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools you need to help you maintain discipline, because discipline and consistency in everything are paramount. And today's Tim's Trading maxim number 2, there will always be another trade. You may have heard the term FOMO, F-O-M-O, the fear of missing out. You know, you see a trade moving in the direction you expected it to, but it's moved on and you missed the original trigger. With everything in you, you want to jump into the trade, but as a successful, disciplined, and mature trader, you know that it's too late to take the position, so you do the right thing and stand aside. You know there will always be another trade. There's no reason to take a trade that doesn't follow all of your rules. Remember our Aussie yen trade plan for today. We're going to buy a daily candle close above the triangle or above 85.50. And our DogeCoin trade plan for today, we're going to buy a daily candle close above the bull flag. For both trades, take a full-size position if you've got average volume or better. Half-size position if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 ATR. And that's all for today's video. Come back Wednesday, Friday, and next Monday for additional videos. They come out at 3 p.m. New York time, barring unforeseen circumstances. And don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you out, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.